What's going on? Alex here, and today I'm answering your personal finance questions from Reddit. Let's take a look. This question comes from helpdesk-26 and goes as follows. How does my budget look, 23-year-old fresh grad? Now, I have about $10K in savings bonds continuing to mature at about 2.5%. They are mature, but will still grow for a couple more years. I have $45,000 in federal student loans with a normal rate of about 7.7%. I have another $20,000 in federal loans in my name at less than 2% rate, so I've been ignoring these to tackle the 7.7% loans. I live at home with little expenses. So the gross income is $3,400 a month before taxes, and the expenses are listed here, along with $4,000 in checking, $7,000 in savings. Okay, let's take a look at the expenses. $500 to Roth IRA, $500 to savings, $750 to $1,000 student loan payments, $500 for the car payments, gas, and insurance, and $100 for spending and everyday expenses. I'll be going back to school on my company's dime for an MBA next year. Good stuff. Have someone else pay for it. Use other people's money, OPM. Should I hold back on savings / my Roth and dump more into my loans? Should I cash my bonds and put them towards my student loans? I feel like $500 to savings may be a little too much since I live stably at home. How am I doing for being 23? I've been working for about 6 months, so I'm just getting started. I'm waiting on contributing to my 401k until my company match kicks in. I hope to max that out when it does. I know my car expenses seem high, but I count it as necessary as well as an entertainment expense. I'm into cars and it keeps me sane. It's important to stay sane above all else. I feel like I'm poor / not doing great, but I've never really had a budget like this before. Please let me know. Thanks. These are some great questions over here, and I got to tell you, I think you have a good head on your shoulders in terms of prioritizing things like the 401k match and things like that. And the questions that you ask let me know that you're definitely on the right track to financial success down the road, let me tell you. So, in taking a look at this situation, what really stands out to me is the $65,000 in student loan debt. So, $20,000 of that is at that 2% rate, so not too concerned there for the moment. But what really stands out is this $45,000 in student loans with a 7.7% rate. Now, here's the thing. When you have debt, one of the big questions is what kind of return are you getting on the other assets that you have available that may be used to pay down that debt, all right? So as a very crude example, if your debt is charging you 5%, but you're getting returns on some sort of investment at 10%, then it's more advantageous to continue that investment and then use that income to pay off the loans, right? Because the return is higher than the amount of interest that you're paying, that the interest rate. In this situation, the amount of interest on the student loans is accumulating much faster than the interest that you're making on the $10,000 in savings bonds. So the first question is, why haven't you taken that $10,000 and thrown it directly at this $45,000 debt? Because here's the thing. This $10,000 over a year, assuming simple interest, is going to earn this much. Let's calculate it. So 10,000 times 0.025, you got $250. All right? Well, how much debt have we accrued throughout this time on this $45,000? So $45,000. And we're just going to assume simple interest for now. We don't have to get so fancy. So 7.7%, $3,465. All right. So if we subtract the $250 that we made from the savings bonds, we're in the hole for $3,215. All right. So in this scenario, it would be beneficial for you to take that 10 grand in savings bonds, cash those in, and apply them towards the debt, because that's going to not only decrease the total amount of debt you have, it's also going to give you more breathing room in terms of that monthly cash flow that you described over here. That's the first thing. The other thing I noticed is the $500 contribution to the Roth IRA. So Roth IRAs are great. They have a lot of benefits, but one of the downsides is that you do not get a tax deduction when you contribute to the Roth account. So what that means is that there's no immediate tax implication. You're putting that money away and it's growing for you, and essentially it may be useful for you down the road in retirement, but right now it's not really doing much. What I'd rather see is you putting that $500 again towards that debt so you can pay it off that much faster, because that 7.7%, let's not forget, accrues year over year, and compound interest is a wonderful thing when it's working for you, but it's not so great when it's working against you. So we always want to wipe out these loans that are at the higher interest rates of 5% and up whenever possible, and here's a great opportunity to do so. Now, aside from that, you also have $4,000 in checking, $7,000 in savings, which is well above 6 months of your expenses. Plus, you're living comfortably at home. It's not like you're taking care of a spouse and 2 kids and a mortgage, things like that. So right now you have leeway in terms of getting into a better financial position than you're currently in just by reallocating some of these assets and applying them towards the liabilities. So that's basically what I see here from what you described. Once you apply the savings bonds towards the debt, you cut out the Roth contributions for now, cut out the savings allocation of the $500 for now, you're going to see that debt get wiped away so fast that you'll amaze yourself. Trust me. And paying down student loans, I can tell you, as someone who has, feels great. All right. To be debt free is a weight lifted off your shoulders. Okay. The fact that you're going for your MBA on the company's dime, that's a beautiful thing. I think you're on the right track. You have nothing to worry about. So hopefully Help Desk 26, this adds a little bit of color to your situation, gives you a bit of feedback. And if this video added value for you, go ahead and hit that like button, subscribe to the channel, and make sure you hit that bell icon to be notified of future videos, because there certainly will be more. And with that said, hopefully this was helpful. Thanks for watching.